Happy New Year. Happy 2025. Welcome into this new season. If you're new here, excited to go along this journey with you for the remainder of 2025. And hopefully we have a great Q1, Q2, Q3, and ultimately Q4 and finish out the year. But we're just getting started at the time of this recording. So in today's video, what I want to do is I want to go over a 2025 trading plan. Now, some of you may say, well, Brian, is this your trading plan? How can I benefit from this? My objective here always on this channel and on public platforms is to provide how it is a use case for someone else and use myself as an example. So in today's video, what I want to do is go over a trading plan that I have an idea for myself. And trading does not mean just day trading in and out very quickly. You could use the term investing as well. So if you are trying to set up a long-term brokerage, if you're like, man, I have $1,000, how do I grow it to 10 grand this year? So on and so forth. Brian, what are your predictions, maybe your opinions on how this year may go entering into a new presidency? We have the inauguration coming up in about 20 days at the time of this recording. So with all that being said, let's jump into today's video. I want to make this short, sweet, and to the point. The market opens back up in the morning at the time of this recording. So, hey, we're right back at it, right where we left off, okay? So welcome to the channel. My name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneurs and thought leaders. Was former pharmacist, undergrad in chemistry, matriculated my last 8 years in full-time entrepreneurship at the time of this recording. We are primarily in the coaching and consulting space. So if you hear this teacher vibe, professor vibe, as people say, professional yap sessions, okay, I like to make them efficient, but hopefully I am communicating to you in a way that you understand, all right? Trying to make things simple. We need to make things simple again, okay? But without further ado, if you want to join our Discord, it is right down below. You can join. It's called Leverage University. We have holistic life, business, entrepreneurship, career advice, professional speakers, just thought leaders, as we call ourselves, inside of our community, where we're leveraging our lives, our businesses, our finances, our careers. So make a connection, jump in down below. You can jump just in the community level if you'd like to, just support the channel and say, hey, I want to have additional conversation with some potentially some special lives, some pop-ups, some trainings, things of that nature that'll be only inside of our Discord. All right, we have some exciting things coming on this channel as well. So for those of you that came on here for the trading content, if you're like, man, I know it's about finance and trading and all that kind of stuff, but I also need to get this right, okay? Because obviously I have some fear, I have some greed, I have some personal things that are going on, and I can't, balance everything. So I want this holistic nature. So we've got our Thought Leader Thursdays that'll be coming on here. I've got my Leverage Talk podcast as well. There's 100+ episodes on there that you can go listen to my journey and how it may benefit you, and some amazing guests as well, all right? So all that being said, thank y'all so much. Check out what we got inside. If you need one-on-one support, we do have private mentorship as well to set up your business, get your life in order, right? Learn this trading skill set, all this good jazz, all right? Well, let's jump into some historical data first, okay? I always like to understand where we are, where we've been, to understand where we are potentially going, okay? So there's a presidential cycle that is obviously coming up that we're in. The inauguration's coming up, like we said. And in the first year of a new presidency, we have like a very muted market. It's kind of flat in a sense, okay? If you think back to Biden's term 2021, it was exponential, right? It was exponential, but he was sworn in, right, in the fall of 2020, or excuse me, he won the presidency in the fall of 2020 and then was inaugurated in 2021. 2021 was a great year, right? But we're coming off that Trump presidency, coming off that black swan event of COVID. All right. So it was a little bit different of a year. Okay. So I like to look back more so to like 2017 going into 2018, Trump's first term. All right. So first year typically is around 7%. Okay. Let's just round it up to whole numbers. The second year is a little bit, a little bit iffy. Okay. If you remember, 2018 was a little iffy. And then 2022 for Biden's term was a little bit iffy. That was a bear market. Okay. The third year, if you remember 2023, we started to really pick up. And then ultimately 2019 into 2020 were rising years as well. Okay. So I'm looking at this as historical context to just give a gauge of what may happen following this extreme bullish run from 2021 into 2022 bear market, and we've been running for the last almost 2.5 years, okay? So can we continue even though we're sitting at all-time highs with a little bit of uncertainty in the market? All right, maybe we can, but I think a lot of investors right now, as we saw last year, right, 2024 end off, which was a couple of days ago at the time of this recording and release, we started to tail off. Okay, December 30th, 31st, we started to tail off. Some profit taking started to come in. Okay, so let's go jump into the charts and let's visually see what that looks like. All right, it gives us an idea of what the trading plan should potentially be for this first quarter, and just be a little bit more cautious. I personally always like to start the new year off green. I like to start my first trades green, even though that doesn't mean potentially me taking a trade the first day the market's open, right? If I don't see it, it really spearheads your trading and investing journey to start seeing your portfolio going green, giving yourself a little, as we call, cushion. All right. So here is SPY, and what we've been looking at, myself included, if you've been watching other content creators on these public platforms, is we've been kind of looking on the SPY as this all-time high head and shoulders that's been kind of forming here, right? Where we've been looking at this as a potential like pivot point where we could see some more downside selling into the inauguration. We don't know. No one knows when it will happen. No one knows when the pullback will happen. It's just, man, this is getting real close, and we're starting to see sellers step back in, right? Every time we had a pop back up, we came down, pop back up, came down. And if we see that form, we still are forming lower highs here, okay? So we do have a trend change on a higher time frame, a daily and even a weekly trend change. So anytime you see a trend changing on a higher time frame, is something to be mindful of. And you also can tell by the wicks, or some people call them the shadows of the candles, these wicks right here, that big, large engulfing candle, okay? We pretty much gave back this whole move, and then we are forming lower highs continuously, right? There's a lower high, slightly higher low right there, kind of tried to recover, but then we close lower here. So that trend has changed on the downside. Now, here's what I was talking about finishing off the year right there, okay? We could not close really strong back above that 587 level, even though we're holding 584, all right? So just something to pay attention to. I'm a big fan of gap fills. Talked about on this channel before and inside of my community as well. These gap fills here, gaps like to get filled. So do we push down, right, before the inauguration, and then we find a support level and rip back up and fill these top gaps? Or do we get strong and we go into the inauguration with more optimism, okay, and we go into February with more optimism, and we get bought up and we fill those gaps, but we still maybe form a lower high here and then come tumbling? All right. So we're kind of in this middle stage of where the market wants to go. All right. So that helps me staying on topic with this, this particular video is 2025 plan. I personally want to stay a little bit more cash heavy. Okay. I want to stay a little bit more cash heavy at all time highs, right? Just because there's a potential where there's the risk to reward is maybe getting a little bit stuck up here at the high. For those that don't know or beginners, risk to reward just means if I buy, just say the S&P 500 all the way at 586, okay, and I run it just say to, I don't know, I'm talking about heavy, buying heavy, right? I put all the cash that I made in 20, whatever tax write-offs I had, extra cash I have, pull out my savings and I pour it into the top of this, okay? Maybe I ride it up, maybe 15, 20, 30 more points, okay? 620 or so, right? That is a possibility. However, what if we do pull back before we go higher? And I'm not talking about tanking just yet. I'm talking about just a slight pullback, maybe to 570, okay? 570 and then ultimately 560. That is a possibility, which would still form, guess what? Higher lows on a monthly time frame. All right, and it would look something like this. All right, so we're still within range. It's getting real close here because you need to have like a monthly candle close underneath this range here. If we close a monthly candle, if January starts off a little bit rough on the first couple of trading days, right? Yes, we could get underneath 583. If we break underneath 583 with a solid candle close of at least an hourly candle, I personally believe, based on technicals, we are coming down to that 570 level. All right. So watch 583 this week. If we finish the week strong and we rally back up, or is there more selling stepping into the new year? All right. So watch that 583. All right. So there is the overall sentiment of like my trading plan to start off the year. All right. But however, I am looking to load the boat, meaning shares, leaps, leap options, or bigger swing option plays. If we do get that big pullback, that's what investors have been waiting on, is a bigger pullback so we can load the boat a little bit more, very similar to here. All right. Very similar to there, and more so similar to this 2022 pullback. Okay. So just say 2026, end of 2025, going into 2026, which is a ways away. We're just starting 2025. Just say we do pull back very similarly and have that. Just say, how much is this? That 20% pullback. Well, let me measure this from the top of here and just say we do something like that, and we go higher and we pull back, just say 20%. Okay. And we come back to just say this area of interest of demand around 500. Okay. That could take into 2026, but then 2027, 2028 would look very similar to this, which would be another massive rally. Okay. So let's simplify this even more, especially for my beginners, because it is a public platform. Dollar cost average. DCA, because there's still a lot of speculation as to Trump and his cabinet making people a lot of money, especially in the markets. However, if you've never been inside of a Trump market, it can be very volatile, right? So you have a nice pump 2017, pullback 2018, pump 2019 into 2020, and then end of his term pulls back, right? It's very volatile. However, if you're dollar cost averaging, meaning just put yourself on a recurring investment, right? $5 a day, $5 a week, $10 a week, $1,000 a month, extra, whatever your investing strategy is, put that in. Now, let's jump into that long-term investing strategy here, which is an investment calculator. Okay. So let's just start off with, let's just look at the year. If we go based off this presidential cycle here and we go for the first year, just say, let's round it up to 8%. Okay. Just say we've had a massive 2024, 25, 30% returns on the S&P. Okay. And we've got investment calculator, and just say someone's got, I'm going to just make it very overall welcoming to everybody. You can plug whatever number you want in here, but just say someone's starting off the year with 10 grand. Okay. And they're like, what will I return after 1 year? And let's just say 8%. This is just the S&P, right? This is just SPY. This is just SPX, right? Your ES, right? This is just your overall S&P 500. Let's just say contributing, let's just make it an extra $100 a month. Okay. I understand, right? Some folks, it's just like, yo, this is tight around here. Okay. However, this year, think abundantly, think accruing, think more long-term, right? Because I know folks nowadays are looking for income generation. They're like, Brian, I understand a long-term investment strategy. I'm patient, but I want to generate some income. But just be mindful, just 2023, 2024, just people are looking, I'm even looking like, yo, I should have lowered the boat even more, right? So you have these $1,000 in the beginning of the year, $10,000 at the beginning of the year. You start to accrue this amount of money over these periods of time. And then at the end of the year, you're like, where'd all that money go, right? So let's calculate it right here and how much it will return you. If you got 10,000 that you start with, an 8% return with an additional $100 a month, which will be additional $1,200 a month. Okay. This will, in balance, would be $12,000. Your total contribution is $1,200, total interest. So your in balance would be, you'd make about $2,000. Okay. Now that's on the lower end. Okay. That's just investing simply. So a lot of folks, they need to just see this. Now let's get a little bit more aggressive. Okay. Just say you have $500 and just say the return rate is 15%. Okay. 15% because you're allocating, you're moving things around, right? You buy some shares, it goes up, in the first quarter, you reallocate, put it back into something else, you reallocate, get another 10% on that move, you reallocate. So this is just share buying. I'm not even talking about options trading, futures trading. We will get to that. But do you see here the 15% with an additional $500 a month? Okay. Finding it, like, stop going out, don't shop that month, right? Get an extra part-time job. Maybe you make it from trading and you put it into your long terms. I'm not sure, but $500. Well, that's an extra almost $8,000. So you have 10 grand now cash, and then that's an extra $8,000, okay, per year. So this is just share buying, okay? You can plug whatever number you want in here. Now, just say we've got trading in there, okay? We got trading. Now, trading can yield bigger returns. Obviously, you can have day trades that are 40%, right? You can have a swing trade, meaning you're carrying that options trade over, right? More so over the next couple of months, right? And you're yielding just say 200%, 300% on some swing trades. So now just say this goes up, right? And I mind you, this is not calculating options in a sense, but just say over the term of the year, you have an account of, just say, a $5,000 trading account, and you have a $10,000 long-term account. Okay, so you have two accounts, a trading one for options, and you're only trading back and forth, meaning you're taking profits, you're getting in and out. Then you have the $10,000 that's over into a long-term investment portfolio that you're just buying shares. You don't want to look at it to the end of the year. Okay, so let's just say that this $5,000 over the course of the year, you can double that strategically, which is very, very possible to do. Okay, more so than you think with the right skill. Okay, let's just say there's no additional contribution, and this is your trading account. Okay, so this is going to be obviously $10,000. So at the end of the year, you have a trading account that you've slowly grown, right? I know people want to flip a 5,000. Now, if I'm watching with some of my advanced or experienced traders on here, you understand, like, $5,000 to 10,000. I can do that in a couple of days. Yes, I understand that. But I'm talking about, go back to your beginner days. Go back to, man, it could take me 365 days safely to turn $5,000 trading options into $10,000. That's very simple to do without risk. Okay. So that's what I'm looking at. Now you combine both of those. You've got the long term that you're buying shares, and it accrued you that 8,000, right? And then you've got a $5,000 trading account that you are trading safely, and hopefully you're learning from somebody. It could be from our group, it could be from another group, it could be on your own, it could be from the free content, right? Just learning, right? I'm not here to market necessarily that you need to learn from me, right? But if I resonate with you, great. I'm just providing value here. So we got $5,000 that you have made plus the 8,000, right? And you have that could be your extra. That could be a down payment on a home. That could be your extra. And again, plug any number that you want here. Maybe like, Brian, I only got an extra 4,000 total. Okay, well, how would you split that up? You always want to split up into long-term more. So if you got 5,000 total, you want to put 4,000 into your long-term and 1,000 into a trading account. 4,000 long-term, 1,000 trading account. Okay. That's just my opinion, my recommendation. Right. So that is the trading plan, or just an idea of how you go both ways. A lot of people have been asking myself, and a lot of people are just confused on, like, trading, investing. Long term, you're just buying a share of Apple, you're holding it, or buying the S&P 500, you're holding the shares, right? It's a very simple strategy. Just dollar cost average it. Put it on a $5 recurring investment. Put 10 grand in, 5 grand in, $1,000 in, put $5 in, $5 in a day, $5 in a week, $5 in whatever it is that you want to do. Okay. You want to dollar cost average slowly into that. And then you look at your trading account, and that's where you're more active trading options, futures, whatever asset class that you want to trade, and you're yielding that income more quickly, right? But you're not risking as much because I've got majority in my long term. That makes sense for everybody? All right. So let's start wrapping this up here, and let me give you some trading rules that I'm going to be looking at and following for myself, the community, Leverage University, and our live trading as well. Okay. And these are simple rules. They may seem redundant, but never add to a losing trade. Okay. Now, I'm going to summarize some of these because they are very simple. Never add to a losing trade. What does this mean? Is that if your stop loss on, just say, an options trade is 15%, right? You put $200 into a trade, and you say, if it goes down 15%, I'm comfortable losing that. I'm going to stop out. Okay. Go back and listen to my intro to options video on this channel if you need understanding of all the rules and options trading, all those things. But if you've been watching my videos and you're understanding, then you know what this means. Do not add more to a losing trade trying to dollar cost average into that trade. Okay. If your stop loss is 15% and you put your full size position in there, $200, and you're like, Brian, cool. I'm cool with, what is that? 20%, 15% of $200. Move that over. That's $20, 10%. Just say you're $30. Okay. I think it's like 27.5, $30. If I put 200 in, if it hits $30 loss, I'm out. You just have that rule on automatic every single time. And it's going to be hard because some of you are like, well, what if I just keep hitting that 30? You keep hitting that 30, keep hitting that 30. Yes, I understand. It may seem like you just keep hitting, but you're still alive. So you can come back the next day, slow your roll, and find a better entry for your trade so you don't have so much 15% drawdown, right? It doesn't hit so quickly, right? Again, I'll take a pause here. If you want to learn how to trade, and you want to see myself live trade inside of our Discord, please click that link down below inside of our university. I would love to have you in there. Right, we're doing it every single day. I will be jumping into futures, which I'll end off here on this video. All right, let's read quickly through here. Never lose more than 1 to 2% of your trading capital on any one trade. Okay, let's use that $5,000 example. You put $4,000 in your long term. You have $1,000 in your trading account. All right, your trading account for the day should not go below $200. Let's just split the difference, 150. Okay, so for the day, you have $1,000 account. It should not go below 150 for a loss. Then you cut it. Cool. I took a loss today, took a red day, come back tomorrow. Never trade anything you don't understand 100%. This is wonderful. I'm going to be simplifying my trading and what I like to personally trade, right? Because sometimes you'll see these groups, or I've seen free Facebook groups, and that's cool. But people jump around. They'll go on Reddit and like, man, this person made X amount of dollars off of this stock, right? But you don't trade that often. So pick yourself 3 to maximum 5 companies to watch, okay? Including the 2 indexes, SPY and QQQ. So then you've only got 3 companies. So just say it's NVIDIA, Apple, Amazon. Just say it's Apple, Amazon, Google. Just say it's Palantir, Tesla, and NVIDIA, right? You picking your 3 to 5 go-tos that if you don't see a trade on those 5, I'm not trading it. I'm just talking about for options as well, okay? Obviously, futures, it's ES and NQ. All right? Trade in the direction of the trend in your time frame. Whew, this one was tough this year. I'm not going to lie. I personally, and if you know me, you know me, I personally like to short the market, okay? And it might seem crazy. Obviously, I like the market to pull back so I can buy long term, but I like shorting the market. My number one, I hate saying trading strategy, but it is a resistance, okay? Put at resistance and pull back right to the volume weighted average price, or VWAP. That to me is a 20% to 30% trade every single time, even if I'm scalping that trade, meaning I'm in and out within a 5 to 15 minute time frame. That is my bread and butter, okay? Sometimes I get a little bit burned because it goes higher, but I know I can trust that trade 85 to 90% of the time. So if I lose 15 to 10%, cool, right, of the time that I take that trade. So, however, I might change my trading plan this year to, if the trend is my friend and we are bullish for that day, Brian, wait for the pullback and then buy calls going up for options. Wait for the pullback, okay, on futures, buy buys going up. All right. So I'm going to be testing out that strategy. I was testing out the end of the year. It was working beautifully. I know it sounds simple, but when you like something, your eye sees something. For those that know, you just can't stay away from it. So I'm like, ooh, I love this. I love seeing a big red candle because I know that's money making. All right. Only look for low risk, high reward trades or high probability A+ setups. Okay. If you don't see it, do not just gamble. Close your laptop, right? Have a walk set if you work from home, right? If you are in a live trading group, close the trading group and say, hey, I don't see anything. I don't like it. I'm out. I'm like, I don't see anything either, right? Let's just cut it. Let's not stay in these trading groups or whatever you're in, or you're on your laptop on your own and you're just staying on the charts for a couple of hours, right? I know sometimes it takes that long for a trade to play out, but my rule this year is maximum 2 hours in the market. Sometimes in 2024, I was staying on the charts a little bit too long, but this year, no, right? So if you're inside of live trading with myself or you're inside the university, right? If I don't see anything in the first hour and a half of the market, right, and it starts to slow volume, I'm out. I'll come back in the afternoon. I'll keep looking at the charts periodically, but it feels so much better. Like, cool, my setup may set up the next day, okay? And I'll just get the levels for that day and move on. Trade your plan, trade your systems, the chart and price action, not your opinions. What does this mean? That means that some people believe, man, Tesla's only going up. Why would I play puts on Tesla? You've got to trust the charts and the price action. I don't care if Tesla is bullish. If it's at resistance, don't keep trying to buy calls. Don't try to buy Tesla at $500, right? That's your prerogative. This is not financial advice. However, just trust the charts and understand that Tesla's at resistance. At resistance, what do? There's profit taking. You may consider some puts. Yes, people do play puts on strong stocks, all right? If NQ or ES for my futures people, if it's at resistance and you want to scalp or play sells or buy sells, cool, right? Write it down, right? Trust the charts and the price action. If it's weak, it's weak. If it's strong, it's strong, right? If you're not comfortable trading that price action that day, just stay away, all right? Find a trading methodology that fits your personality. If you do not like quick moves and you don't, and the candles stress you out, you are not a scalper or a day trader. Okay. Switch to swing trading, switch back to long-term investing. Just stay off the trading, right? If you don't have a high risk tolerance and aren't willing to learn, do not get frustrated that it's not working for you. It's just not maybe your personality, and that's cool, right? I personally like the fast movements, right? I still long-term invest. But swing trading, I'm going to be doing more of it. But I like swing trading when it is significantly oversold. Okay. When something has retraced 50 to 70%, sometimes 100%, right? Like AMD at the time of this recording has gone from 227 all the way back down to 120. That's when I like swing trading, or that's when I like considering buying a little bit heavier. Right? I do not like swing trading when things are at all-time highs personally. However, that's your prerogative again, right? So what is your methodology? I also like sleeping well at night, right? So swing trading sometimes or holding positions overnight. If I don't see it, I'm out, right? Unless I plan to put 3 months to 6 months on that contract for options. Okay. Don't trade before you have a complete trading plan and rules and entries and risk management. Yes. Okay. This means that if you wake up late, which I've done before, I think everyone's done it before, and you jump on the charts, you jump on the computer, and it's like, man, I need to find a trade. Right. Sit back for a second. It's like, man, I might have to miss that first move because there wasn't really a trading plan set at least 30 minutes before the market opens. Okay. Do not just jump on and try to jump into something. Okay. unless that is your strategy. All right. But if you have a proper plan and you want to take something right at market open, great, do it. All right. But do not look at something and you don't have a trading plan, or I've done it. I think everyone has done it, is you were looking at a specific ticker or a company, and then you get sidetracked and you come over here and you're like, I got to find something. I can't wait on my trading plan. I'm going to come over here to this different company and try to find something there. No, don't do it. Okay. The size of your wins and losses determines your trading success. Everyone will take a loss in the stock market. Okay. Now, some people say, well, it's not a loss until it's realized. Yes, I understand that. You can keep dollar cost averaging for your long term. Some people have been waiting on Square, right? Some people have been waiting on Tesla to make this recovery back. I understand, but I'm talking about for trading more specifically, right? And also in long-term investing in shares. If you got to keep your stop loss and cut it for a long-term investment share opportunity and you don't want to be down 20% in your shares, cut it, find a re-entry, and then, hey, get that back and get a better average cost. All right. So making sure that your losses are small and then you maximize on holding those winners longer. So you start to think like, man, I don't want to take a 15% loss. I don't want to take a 20% loss. I don't want to take a 15% loss. But then if you keep taking those, let's go back to our example, that $200, right? You keep taking 30. By the time at the end of the week, you're like, man, I lost $90. Right? 3 days of 15% losses. Guess what? That fourth or fifth day comes, you make one good trade, it goes in your favor, 30, 40, 50%. Great. You made back $150, $200, $300, $400, right? On that trade. You get my drift? And I'm talking only from experience, because I wouldn't be saying these things if I have not done it, or anyone that's experienced watching me has not done it as well. We all do it. So it's just reinforcing these rules for yourself. Your risk management will determine the success of your technical trading system. If it breaks my level, I need to get out. As much as you don't want to take that loss, if I'm trading calls and I need to be in puts, get out. If I'm trading puts and it's going up and up and up and up and up, and I'm just keep adding and adding and adding, get out. Right? Cool. All right. Here's my final one. This one's a bonus. Is do not add heavy into your first position. Okay. Do not add heavy into your first position. What does this mean? I'll make it in two examples and I'll leave you be. One, in trading options or futures, or you are day trading. Okay. Even swing trading. You want to add, as I call it, and maybe others call it, starter positions. So in options, that's adding one or two contracts, whatever your starter position is, okay? Your amount that you want, that you're comfortable getting into the position. And the more that you like the trade, you may average in. So you add more to it. You add more size, as we call it, okay? Let me give you an example. Just say contracts in options. I say, hey, I'm going to get into a starter, which is a couple of contracts, just getting started. And then someone else says, I'm going to add 10 contracts immediately. And it starts going against them. Well, it goes against them pretty heavily and they got to cut it. And then I'm still in my starters, and then I get a better average cost and I add more, and I'm still in mine. And then I have a winning trade and they had to cut it early because they added too heavy too early. Okay. In shares, same thing. Okay. I know a lot of you are like XRP, and that's why we say dollar cost average, DCA. That means average in slowly, put it on a recurring investment. If you're not actively investing on the charts or watching it on a daily or weekly basis, just slowly adding in. So if you got $5,000, do not load the boat of $5,000 immediately. Split that $5,000 up, right? Add 1,000. Cool. It drops a little bit lower. Add another 500. Drops a little bit lower. Add 1,000. Drops a little bit lower. Add another 2,000. You get my drift? So you're averaging into your position so you don't load the boat at 5,000 and then you're panicking when it comes down, okay? Or it goes against you. All right. So with all that being said, those are my trading rules for 2025, trading plan for 2025, my sentiment and idea. I'm looking to have I would say a less aggressive approach this year. I'm looking to really have a steady growth this year. Personally, I was a lot more aggressive in 2023 and 2024. And there were some burning opportunities and there were some winning opportunities. And I'm just not trying to have that. I'm not trying to have that stress this year. Okay. Just saying. I'm trying to have a nice, easy, let me take my 30% wins. Let me do some swing trades. Let me not trade every single day, things of that nature. Okay. Now, the final bonus that I did tell you I would say, because some of you have been looking forward to this, which will be the futures market. We may include some futures Fridays here on the channel where I may trade live futures on here. And I will be transparent that I will be going through a combine right through Top Step. I'm not sure if I'll do the $100,000 or the $150,000 account, but we will see. And then I will guide through those. I'm looking to pass that combine, get funded, and then start taking payouts from that. And my objective for that is to lower my risk, right? Lower my risk, understand that I have a trading skill set, and then put that into my long term. So take those payouts from the funded account and then putting into my actual portfolios that I can manage myself. All right. So that being said, thank y'all so much. Peace, love, and blessings to you. Happy New Year again. First video of 2025. I'm so excited for you. Looking forward to seeing you inside of our university or our community. So many things headed into this new year. I'm excited to go along the journey with you. Peace, love, and blessings. See you in the next one.